Alrighty, Ramsey show ending.
This is James Childs.
Nice show begin.
Ramsey Show. You can listen to all our shows with the Ramsey Network app on your smartphone. Browse by topic or even send clips to your friends. Download the Ramsey Network app in your favorite app store today.
Sorry about that, James. Alrighty. As per usual, we'll wait a few minutes to see if anybody shows up. I'll type some stuff into the chat. Schedule a free financial coaching consultation / assessment. Link for that is Calendly, CALENDLY.com/coach Steve Money. And it went to both Twitch and the YouTube. We simul stream on both. You can email me about anything. Yes, anything. Coach Steve Money at gmail.com. Finally, donations. It's paypal.me/coach Steve Money. Alrighty. Let's just wait about 30 more seconds here and then we'll get going. What up, AJ? Look what I found. I have this just here handy for you. I don't know if you can read that or if that's backwards. Yes, Nurse Midrats. This is show number 179 that I've done. It's still definitely a work in progress. AJ, it says on DVD and VHS, May 25th. That's how old this is. What up, Matty Bags? All right. Those of you that know me, you know that I will take any excuse to sing. And since December 1st, I've been singing Christmas songs, so let's sing with me. Yeah, I keep stuff like that when I have those. All right, let's do the most wonderful time of the year. Let's see, where's my music? There we are. Sorry, new producer. Gotta moving all these windows around myself. What is the show about, or what do I teach? I do Ramsey stuff. Basically, what I do is I do have a baby step song coming up that I wrote. But basically, I mostly talk about like today's headlines and about how they how they affect or have anything to do with Ramsey teachings and so forth. It's loosely it's a loose format. It's like anything I want to talk about, but it does come with Ramsey coaching as from the view of a Ramsey coach, which I am. All right. But now we're going to sing a Christmas song. And there are the lyrics right there. So that's how we're starting off. Ready? Maybe. Come on. It's the most wonderful time of the year, with the kids jingle belling and everyone telling you be of good cheer. A little pitchy. It's the most wonderful time of the year. Let's see if I can get better at this. It's the happiest season of all. No practice. With those holiday greetings and gay happy meetings when friends come to call. It's the happiest season of all. There'll be parties for hosting and marshmallows for roasting and caroling out in the snow. There'll be scary ghost stories and tales of the glories of Christmases long, long ago. It's the most wonderful time of the year. There'll be much mistletoeing and hearts will be glowing when loved ones are near. It's the most wonderful time of the year. There'll be parties for hosting, marshmallows for toasting, and caroling out in the snow. Be scary ghost stories and tales of the glories Christmases long, long ago. It's the most wonderful time of the year. There'll be much mistletoeing and hearts will be glowing when loved ones are near. It's the most wonderful time, the most wonderful time, oh, the most wonderful time of the year. All right. Merry Christmas, everybody, by the way. Happy New Year, etc. I will be live again tomorrow, even though the Ramsey Show is going to be another replay tomorrow. And this is... What up, Jess? Sub for the singing. Thank you. Appreciate it. Thank you so much, nurse. All right. Listen for the drum taps on this one. Like all plans, it starts with step one. $1,000 emergency fund. Step two, you'll pay off all your debt. Except mortgage, we don't do that yet. So pay off your consumer debt. Every one of the charges, from smallest to largest. Baby step 3 is next. Full emergency fund of expenses. Stay gazelle intent. His name is Dave Ramsey and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I coach, that's why I coach, and why I host this YouTube show. If you don't like results you're getting now, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Step 4 is when you can take a breath and go less gazelle and invest. Step 5 is to save for your kids. No student loans at all for college. 6 is to pay off your home. Step 7, build your wealth and don't keep it all yourself. And you've lived like nobody else. And now you get to live large, and now you get to give large. His name is Dave Ramsey, and this is his plan. And I hope to meet him, I admire the man. I've messed up in this song, but these steps have made it right. That's why I coach, and why I host this YouTube show. If you don't like results you're getting now, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Trumpet, take it home. Live from Columbus, OH, it's the Ramsey Show Aftershow show, brought to you by Tina Scher, the Queen of Sheba. Here we talk about the Ramsey Show YouTube chat, and the people in it, and all things financial, and whatever else I want to talk about. I'm your host, Coach Steve Money. I'm a certified Ramsey Solutions financial coach. You can schedule a free consultation assessment with me at candidly.com/not candidly, Calendly, like calendar. And that link is at the top of the chat. Calendly, CALENDLY, calendly.com/Coach Steve Money. That link is in the description and at the top of the chat. You can also just email me, CoachSteveMoney@gmail.com, right there. You can reach me on Instagram and Twitter, Coach Steve Money, no spaces. If you'd like to donate to the channel so I can make it better, that would be paypal.me/Coach Steve Money. Link also in the top of the chat and in the description. Let's check out the chat. Robert Perry, what up? Spring, what up? Thanks for the IO, AJ. Now, that's cool to be able to leave a job you don't like and do one that you like better. And that's you have options. When you don't have debt, that gives you options. Alrighty, and today's Ramsey Show was a replay and hosted by hosted by Rachel Cruz, author of Know Yourself, Know Your Money. And of course, the baby step 2 version of that is Know Yourself, Know Your Money. And yep, bad joke. And co-hosting with her today was Christy Wright, and her new book is called Take Back Your Time. And it was $20 a couple days ago, but has now joined the $10 book sale. So you can get that. And I also have just a teensy bit of a Christy Wright song. Just a verse and a chorus. Here we go. See if I can do this. Let's see. She wrote Business Boutique and How to Take Back Your Time. Christy Wright, she's helping you with all your business moves. Oh yeah, Christy Wright, she's helping you. Christy Wright, helping you. Ooh, ooh, ooh. That's all I got so far. and might be all that there ever is to that one. Market report. As you can see, everything up again. We've had some 3 good days. And let's see, Dow tops, let's see what this has to say about it. Breaking news here. Dow tops 36,000 in afternoon trade. Stocks touch session highs in final trading the day before Christmas. So it touches it, but I don't know if it got there. Let's see. It said the Dow might be a new record now. No, not quite. Not quite. Let's see. 36432 on November 8th, and yeah, not there. Of course, it may have been close to that during the trading. Just what it closed at is not there. Let's see about the S&P. This is today. As you can see, it was way up there and it closed way low for some reason. Like all of a sudden with 7 minutes to go, people said, uh-oh, we better sell off and make that money. Don't know. Let's see. Oh, that is a high. Yeah, okay, that's a high for the S&P, so new high. Yay for the S&P. Cool. Alrighty, the best performance of the day is the small cap index, the Russell 2000. That's your small cap index here. Here's some more. Oh, there's your headline right there from Reuters.com. S&P 500 hits record close as Omicron, or is it Omicron, fears ebb. So like all of a sudden it's not a problem. So, you know, I mean, why the market went down all those days this month, all of a sudden it's not a problem. So nobody's worried about it today. Let's see what else we got for this. Some earnings coming up here. Fuel Cell Energy, never heard of them, on December 29th. None that I've heard of. One here coming up. The most followed single stocks on Google. Of course, we don't recommend single stocks. Recommend mutual funds, managed mutual funds for retirement, and an S&P 500 index fund if you are saving for a purchase. But you must have the money in the market for 5 years, because that is the safe amount of time to have money in, because in every 5-year period in history, the market has always been at least even, if not up, in a 5-year period. Tesla doing the big moves again. Don't think that would be enough to go for a high for Tesla again. Nope, it was at 1,229 on November 4th, and so it's not quite back there yet, but still a good day. Amazon pretty flat. You'd think that would be kicking up there with the last minute Christmas shopping. As you can see, all the rest of them in the 30s and 40s. Except the artist formerly known as Facebook, Meta Platforms at 1.45%. Alrighty, let's see what the rest of the planet is doing. Europe is all up. Asia all up. How about that? Let's see what the currencies are doing. The euro's up on the dollar's up on the Japanese yen. The British pound, love, is up on the dollar. The Canadian dollar is beating up on the US dollar. About time. And the Australian dollar, mate, is up against the US dollar. Are those crazy kids in crypto all up today? And that's been up for the past couple days after having some rough days before that. So we did that one. Alrighty, this from CNBC.com. The ultimate 222, that's 2022, as in a year, next year, which is in 8 days. 8 days. Safety play could be in this unusual place, traders say. Let's find out where. Gold and silver rallied in 2020. They're now negative year to date. Dave Ramsey recommends no metals, no commodities, no crypto, no nothing except mutual funds and real estate you pay for in cash. Fixed income market as safe haven. It's not often we think of the high yield bond market as the safety place, but credit is not an issue right now, and the U.S. consumer and corporate America are quite healthy. All right. Dave also says no bonds, so this is a non-starter. Let's see. We're gonna hold the Spider S&P 500 ETF. Everybody likes to talk about individual companies, S&P 500 index fund. Like you have your Vanguard, which I have a Vanguard article coming up there where they talk about VOO, and that's the S&P 500 index fund for Vanguard. And actually, that's the one right now, I think. Yep. So yeah, we're going to talk about that right now. And a lot of people love it to say, well, like which one they're in. So, but I mean, those don't really matter because if they're mirroring the S&P 500, it can be any brokerage's fund. All right, so this from the Motley Fool from Fool.com. 3 Vanguard ETFs I'm stocking up on in 2022. Vanguard is a brokerage just like Fidelity. No, I'm blanking on it right now. Nobody knows what's in store for stock market in 2022. That much is certain. Investing in the right ETFs, though, can limit your risk when the market is volatile. These 3 ETFs are some of the strongest in the author's portfolio. And she plans to continue investing heavily over the next year. So again, you have your S&P 500, and I mean, you can take this advice and transfer it to whatever brokerage you have. You don't have to buy Vanguard's, although you can have a brokerage account with Fidelity and buy the Vanguard S&P 500 or any other Vanguard fund you want to. You can do that. Vanguard Total Stock Market Fund, that basically mirrors the Dow Jones Industrial Average, which is the Dow Jones, which is right there, as you can see, up 0.55% today, so almost a little over 0.5%. We did that one, and let's see, what is the third one? A Vanguard Growth Fund. So, and this particular one is a large cap one. And the kids like and other older people too probably like the ETFs because there's no management involved in it, so it's less fees with it. But if you get the right managed mutual funds, it can often make more than the fees. Make more than if you subtract the fees from it, it still makes more than some of the ETFs. So it's just a matter of picking the right ones. This from the Wall Street Journal. Actually, let me get back to the chat. Yeah, Schwab, Ameritrade. Thank you, AJ. I should have looked at the chat earlier. Let's see. Whoa, you guys been chatting. A lot of because we had two nurses. Got two nurses in the chat today. So yeah, excellent. A lot of chat going on. That's great. All right, Robert had to bounce. Thanks for dropping by, Robert. Appreciate it much. 0.66 for the day. What I say? I had 0.72, I think, or 0.71. So yep. So we'll have to see. Oh no, I beat Troy Story. We'll have to see what Kel did. Kel could still beat me. But Mr. Boomer Fun's Troy Story did not get me today. These are fun with the little color coded. Like if it's up, it's green like that. That's fun on the Wall Street Journal. 10-year bond down. Crude oil up a little bit. Gas prices have been coming down though, I guess because they released all that oil, all those barrels of oil from the emergency stock. All right, so this from the Wall Street Journal, the paper of record. Don't know if it's the website of record either, but it's WSJ.com. And this from the business section, and it says TikTok was the internet's most visited site in 2021, even beating the Google. And that is cray. I do not know if TikTok is TikTok a stock. TikTok is a product created by a Chinese company called ByteDance. ByteDance is still privately held, meaning its shares are not available on the stock market yet. Alrighty. And they won't necessarily be, ever. Like, for example, Menards is privately held. There's a bunch of different ones. AJ, what are some other private ones? I think Chick-fil-A is not publicly traded. I don't believe. New research shows video sharing app first topped the charts in February and has generally stayed #1 since August, according to Cloudflare. Gotta subscribe to read the full story. We're not gonna do that. The app, known for silly dancing videos, was the world's most visited site on the internet in 2021, surpassing last year's leader, Alphabet Inc.'s Google, according to Cloudflare Inc. And yeah, I do have a TikTok account. I haven't browsed and stuff on there yet, but I am gonna put the Baby Step song on there once I make a better video. AJ thinks I'm right. I don't care about what the chat is, and the YouTube video is about 15 seconds or something like that behind, so I don't remember what I said 15 seconds ago. So AJ will have to tell me. Let's see. Landry's Restaurants, who owns 15 different chains, is currently private. Okay. Oh, the Chick-fil-A, the Caffey, I think is their last name. Their family still owns that and runs that, and John Menard still owns all of Menards. All right, and not that much going on today, actually, but this from Investors Business Daily. All right, the good thing about having a daily show is that when I finally get the Alzheimer's or get the dementia, you guys will be able to see it live, and then you can make that viral. Is the 4% rule too high? Rule inventor says it should be 4.7% rule now. So, as if you don't have enough to worry about, this is 100%. So you can read it. As if you don't have enough to worry about, some retirement advisors are cautioning the famous 4% rule no longer works. Those doubting Thomases say that if you withdraw 4% of your savings each year, then add a percentage equal to the inflation yearly after the first year. Your retirement savings will not last the 30 years that the 4% rule envisions. Those skeptics say that following the 4% rule will bankrupt your retirement balance well before 30 years. Your IRAs and 401k will end up as empty as the Mojave Desert way too early. But nice and poetic there. Nice prose. You'll be broke in retirement. But is that true? One financial advisor who disagrees, well, one retired financial advisor, is William Bengen. He's the numbers cruncher who originally came up with the 4% rule back in 1994. He says, if anything, the 4% rule is too conservative, not too aggressive. Retirees do not need to limit their annual starting withdrawals from retirement savings to 3% to 3.5%, as some financial advisors recommend, he says. Instead, retirees can safely withdraw up to 4.7 a year without threatening to wipe out their retirement savings before 30 years have elapsed. The reason so many people think the 4% rule is out of date is that they overlook its premise. When I did the original research, I was looking for the worst possible time to retire, Bengen told IBD. Excuse me. That was late 1968, early 1969. I was born in August 1968. Coincidence? I think not. Why was that the worst possible time? I made a word, worstable. The worst possible time to retire? At that time, a retiree would have had to endure two big bear markets, the 69 to 70 and the 73 to 74 ones, which caused his portfolio to shrink early in retirement. After that, the high inflation of the 1960s and 70s caused the retiree to increase their withdrawals an unusually large amount each year to keep up with inflation. Those large withdrawals boosted the odds of early depletion of retirement savings. To avoid running out of money, Bengen's calculations led to a 4% cap on first-year withdrawals. No longer the worst of times. But recent decades, especially since the start of a long bull market in 1982, have been a Goldilocks period in comparison. Bull markets have pumped up the value of retirement accounts. Low inflation has put a smaller dent into the buying power of retirement savings balances. Many retiring investors take 4% plus inflation adjustments. Withdrawals have seen their retirement savings grow, not shrink. It was the really high level of inflation in the 1970s that was really devastating. Bengen says retirees now can afford yearly withdrawals greater than 4% plus adjustments. With a proper asset mix, their account should still enjoy net growth. That's where his safe withdrawal level of 4.7 comes from. Now, what does he do with his own money? He's 74 years old, retired in 2013. At that time, I used a 4.5 annual withdrawal rate as my research dictated. That was from tax-advantaged accounts. He has reduced that to 3.5, but the reduction is not because his accounts can't survive at a 4.5 withdrawal rate. It's because his accounts have grown so much during the bull market that he doesn't need to withdraw 4.5%. My current withdrawal rate is about 3.5 as markets have performed so well over the last 8 years. There's another reason the 4% rule, which Bengen says is really the 4.7% rule, still works. He says some of the skeptics simply do not read all of his research, including updates. They seem to ignore the fact that 4% was based on the worst case scenario. That's basically summing up what was earlier in the article. They make no allowance for the fact that we are far from those worst case days. Interest rates remain historically low, although the Fed said they are going to raise them at least 3 times. That's what they project for 2022. Higher yield bonds and stocks entail higher risk, so both Bengen and the skeptics advise resorting to a mix of yield plus selling securities to fund their respective withdrawals. I believe we all use the concept of total return, that is yield plus capital gains. The difference in our withdrawal rates appears to be accounted for by the difference in our forecast of future total returns. Some assume a very low rate of return for many years. Dave recommends the 4 asset classes: small, medium, and large cap, and international. And this gentleman has 5: small, micro caps, mid caps, international stocks, and T-bills. So he doesn't have the large caps, but he, in addition, has T-bills and micro caps, which I assume, I mean, it's small caps is very small companies. I don't know. I guess micro caps are like even smaller companies, I guess. I'd never heard of them. The additional classes give a retiree's portfolio more flexibility. It tends to gain more value when markets rise, tends to lose less than markets fail. And that's like Troy Story's boomer funds that he likes to talk about and he likes to be winning with. But if I win today, that will be 7 apiece. So, and 1 for AJ and 1 for Kelly. All righty. Go back to the chat. I think we're done with this. Yeah. Okay. Current calculation is 4.7% plus inflation is safely sustainable annually. Withdrawal rate applies to all retirees since 1968. Alrighty, let's see. Spring is a fiber artist, a gardener, and many other things. Spring wants to know who says I'm going to get dementia. My kids would sometimes tell you that I already have it, but yeah, I don't know. That was just a joke, indeed. Alrighty, so I think let's take one more. Let's refresh it and take one more look at the Google Finance page. See if there's anything we didn't talk about. Politics. Still have more time to max out your retirement accounts. That's true. You can contribute to a retirement account until tax day and have it still count for the previous year. So if you want to max out 2021, you have until April 15th of 2022 to do so. Let's see. Wild market forecast of a 50% of coming true, says a hedge fund investor. I don't know if we should believe a hedge fund investor, but let's see what it is. If I can't read it. Because, I'm approaching the article limit, so I can. Okay, cool. 50%. Let's see what it is. Tesla. A bad year for Tesla ahead. That's one wild prediction. Also, the Tesla stock went up yesterday after Elon Musk tweeted that he was done, that he has sold enough stock. He, a long time ago, said he would never sell any Tesla stock. He sold some, and then it went down, and then the other day he said, or yesterday he said, I've sold enough stock, and then it went up again. Let's see. AJ said, when you Google dementia and all the links are already purple. Well, there you go. Or that could be somebody trying to trick you, AJ. That could be the government logging in on your computer. Let's see. On the last trading day before Christmas, stocks are in a festive mood. Really? I thought they were open Christmas Eve until 2 o'clock. I guess not. Stocks are in a festive mood, rising amid a rosier view of the Omicron, or is it Omicron? I don't know. Coronavirus variant risks drove solid gains on the Wednesday. If that Santa Claus rally is coming, then it officially needs to start next week, lest we end up with the Grinch. Okay. What are we talking about? Swerving into what if land? All right. 15 surprises that he stresses aren't forecasts, but events that are the consensus views as having a low probability of happening, but in his judgment, have a better than 50% chance of occurring. Betting folks would call this an overlay. Okay, I did not know that. Both President Joe Biden and former President Donald Trump fall into ill health, with both out of the current and future White House picture. Okay, after lame duck takeover by... Okay, this is... Trump's daughter Ivanka and Democrat Hillary Clinton run for president. Okay, alrighty, that's fun. Let's see. Fed Chairman Jerome Powell turns hawkish, but acts too late for rising inflation. Global reopenings help push oil over $110 a barrel. Supply chain problem linger and wages surge. The economy enters slugflation. Sluggish growth, sustained inflation, with debt burdens and housing shortages. Okay, again, these are 15 surprises that consensus thinks 25% or less, but he thinks it's better than 50% of occurring. So the stock market rolls over after rallying to a new high in early 22. So-called innovation stock that performed poorly in 2021 all but collapse in 2022. With the ARC Innovation, that's an ETF, trading under $70 a share. Yeah, there was a guy in the Ramsey chat that was into the ARC, and he was not too happy a couple months ago when that thing started going down. Private and public companies tighten your belts, trimming and spending, which hits Meta. The metaverse is supposed to be the future, though, dog. So Google and Amazon. Now, if Amazon and Google and Facebook all go down, we do have problems. I mean, that much is certain. Let's see. Later in the year, amid a slowing economy, higher inflation, aggressive Fed, a full-on bear market takes the S&P down 30% from early year highs. Well, that will mean it will be on sale if that happens. Let's see. Amazon also runs into labor and shipping costs, while Tesla's shipments and market share are adversely hurt by competitive electric vehicles. Then EVs lose their luster and appeal as it becomes clear that the electric grid is nowhere near ready for a mass switch, nor is your home, and that is a good chance that that's AJ is out. Merry Christmas, sir. We'll be live tomorrow, so if you have time on your Christmas Eve at 6 p.m., I will be here live. Let's see. Robinhood sale to JP Morgan for just $2 a share. All right. Same price paid for Bear Stearns in the 2008-09 financial crisis. Yeah, I mean, you know, if that starts happening, you're going to have these small outfits here taken over by the big banks. Absolutely. Spring will be at work all day tomorrow. Alrighty. Spring, I suppose you want the whole day, Christmas Day, off. Well, fine, but you better be there all the earlier on the 26th. That was a horrible Ebenezer Scrooge impersonation. That was not English at all. Let's see. That's 5 of them. Wasn't there going to be... I thought it said 15. Okay, maybe not. "15 surprises." Highlighted and condensed below. So, okay, so they condensed them down. All right, fair enough. Working Christmas Day as well. Alrighty. Well, you try to have a wonderful Christmas anyway and make those bags. Let's see. 3:30 p.m. until Sunday morning. Alrighty, we'll be thinking about you. Let's see if I did get a subscriber, cause Nurse Midrats subscribed. So thank you very much for that. What did I need to do here? Oh, upcoming streams. I have my son tomorrow on Christmas Eve, so probably not a stream other than the Ramsey Show after show tomorrow. But after that, I will not have anything to do all weekend except watch football. So there could be extra gaming streams. You never know. But it's Mondays through Friday. The schedule is Monday through Friday, 6 p.m. Eastern Time, the Ramsey Show after show. Mondays at 8 p.m. Eastern Time, alternating tech support / Ramsey coach support. One week I do tech support, the next week I do Ramsey coach support. I have 20 plus years in PC repair, and I'm also a Ramsey certified financial coach. And so I look at those two subreddits, the r/tech support and r/Dave Ramsey, and I answer the questions on there with my expertise in those areas. Wednesday, whenever I can get Curse of Oak Island watched, the new episode, whenever I can get it watched and prep the recording and get it recorded and get it uploaded. That's a pre-recorded thing, not a live stream. I will do that, and that thanks to everybody that has subscribed over that and that watches that. One of those videos has over 7,000 views. Much appreciated. And Wednesdays and Saturdays, 8 p.m. Eastern Time, Old Man Video Gaming. And I can probably play some more, have some more streams. Maybe maybe a Christmas Day one. Maybe one on Sunday the 26th as well. So take a look out for that. Give my plugs again. You click on that free financial consultation. As you can see, it's calendly.com/Coach Steve Money, and that just takes you right there, and you just click on that, and then you just pick the day you want and the time. After you click this, it'll show you the times of the day, and that will email me when you want that, and then that will happen. That P right there is for PayPal, and that's for the donation link, which is also right under me there in the webcam frame, and that is paypal.me/Coach Steve Money. As you can see, trying to get it 311 to be 1,000, and when that's 1,000, by that time I will definitely have 4,000 hours watched, which is the other requirement. I am just over 3,000 hours watched right now, so the hours watched will be no problem. Getting that up to 1,000 will be the harder thing. Instagram is Coach Steve Money, no spaces in that. And if you want to email me about financial coaching, about the scheduling, about anything on my YouTube channel, about Ramsey stuff, about Oak Island, about video gaming, about computer stuff, any about the music. I have the music playlist, which has much older versions, worse versions than I sang them today. The Baby Step song, that was 3 months ago, probably close to 4 months now ago that I finished writing that and just did a quick recording of it. And that's why it says temporary lyric videos on these. Dave Ramsey Baby Step song, the John Deloney song, and there's me reacting to John Deloney's reaction to the John Deloney song, and he thought it was cool. Got highlights on there as well. But yeah, anything you want to talk to me about, I'd be more than happy to interact with you. Alrighty. Okay, as I said, I will be back. The Ramsey show is not going to be a new show again until January 3rd, which is a Monday. It's going to be replays until then, but I will still be live daily at 6 p.m. Eastern Time right after those replays end, and including tomorrow, Christmas Eve, I will also be here. So if you have time, if you're not doing anything, if you're going to escape from your family for a little while, I will be here. Alrighty, Merry Christmas, everybody, and yeah, last Christmas song tomorrow. So I'll try to think of a good one to come up with a good one to do as the last Christmas song for this year, and make smart financial decisions every day. It says right there, and so that's what everybody should do. Good night, Merry Christmas.